The Schiller Housing Index is reporting 6 months of price declines, and guess when the last time that happened was? 2008, baby. 2008 housing crisis, and Peter Schiff is telling us that we are possibly in a worse bubble than 2008.
The bubble that we have now is actually larger than the one that popped in 2007, 2008.
So yeah, guys, it looks like we have some problems, and some pretty serious problems at that. So if you're a home buyer or you're interested in real estate, you might want to pay attention to this one, and I hopefully will teach you something and earn your like. See, Jay Powell and the Fed, they seem to be the catalyst that might crash the US housing market. Powell just recently said that interest rates are likely to be higher than previously anticipated, and even talking about doubling the next interest rate increase, which is making many investors worried if this is going to be the needle that pops the bubble of financial unsustainability here in the US. After all, Americans are paying an extra $11,000 a year because of inflation alone. All this extra spending is really starting to catch up with Americans, and it could be a big reason for a U.S. housing market crisis. I think we should be looking at defaults, as defaults could kind of show us the direction the real estate's going. Particularly with the first-time home buyers, defaults are even on the rise already. These defaults are essentially people just missing their mortgage payments for a variety of reasons. Maybe they lost their job, maybe they found a large expense they weren't expecting, maybe living costs have increased. Either way, people have missed their payments. And when this happens, eventually the banks will take the property, which is called a foreclosure. This is my biggest concern, the foreclosure aspect. See, less volume usually means less volatility, but it opens up the door for big price jumps. Let me explain. So let's say that there are 5 houses up for sale, and there are also 5 buyers. The price will stay the same because each house has a buyer, or the price will just stay in that same ballpark, okay? Well, we know when interest rates increase, it takes some buyers out of the market, and because it makes the mortgages less affordable for people. So what's concerning is if interest rates increase, it's going to take more buyers out of the market. But what if it starts introducing more foreclosures, which, by the way, we're already seeing happening? According to ATOM's real estate data, foreclosures have increased by 36% since January of 2022, and increased for 21 months straight. And if it isn't obvious, this is important because foreclosures quickly put homes on the market, meaning that we could see the housing market get flooded with inventory because of foreclosures. So this could be the start of a massive drop in the housing market. Let's move on. So why are people foreclosing? Well, I would like you to think of how much more home ownership has got just in the last 10 years. And it just keeps getting more and more expensive beyond just the price of the house. So there are a number of factors that go into home ownership that make it more expensive. Obviously, the home prices going up is going to make it more expensive, but home insurance is another thing that's been more expensive. CNBC says that home insurance rates are up 12.1% just from last year alone. And along with home insurance, maintenance has gone up and even property taxes have gone up, since property taxes are tied to the home value. So as your home gets more expensive, so does your property taxes that you have to pay every single month. So all of these factors increase the price of mortgages, meaning their month-to-month payments tremendously, making it harder for people to pay for their homes as these expenses keep going up. Well, in order for mortgages to get more affordable, they need to come down in price. But coming down in price opens up a whole nother possibility of problems. This is why this could be the perfect storm brewing. So when real estate prices come down, people can go what's called underwater on their mortgage. And underwater on a mortgage means you owe more on your house than your house is worth if it would be listed on the market. So this can take the incentive for people to pay for their mortgages since they are paying something that they essentially have no equity in. So historically, when this happens, it usually leads to higher delinquency rates, meaning people aren't willing to pay back their mortgage. And CBS estimates that number could be closer to 250,000 homes underwater. I'm not saying this would happen, but imagine 250,000 homes instantly are put on the market. That would be a total collapse of the real estate market since the volume is so low right now and pricing power is so fragile. So what's going to happen with the real estate market? Well, I think we are in a much dicier time than we were before. I originally made a video saying that the best time to buy a home would be at the end of 2023. Now, I'm not saying that's not the case, but things have changed a lot since then. See, interest rates don't look to be going down like we first thought. The Fed will be raising interest rates again, and the debate no longer is if they're going to be increasing interest rates, it's are they going to be increasing the interest rates by 0.25 or are they going to double it to 0.5 this time around? And this is really concerning to us because it looks like inflation is much, much more difficult to control than we first thought and we first imagined, and the Fed is actually kind of struggling to do this. I want you to keep in mind that when inflation was out of control in the 1970s, it took a Fed rate in the mid-teens just to get inflation under control. And it wasn't for another 10 years until we saw the Fed rate even get below 5%. and we are just now looking at 5% currently. And they are dealing with the massive credit issue that we're having right now. We are using 2,300% more consumer credit than they were using in 1975. And my point isn't to scare people. My point is to show some perspective. Inflation can be hard to tame, so it's entirely possible we see rate increases for quite a bit of time right now. There are no reason that rates have to come down anytime soon. So if you're thinking about refinancing, or you're thinking, oh, in 1 or 2 years, rates will be back at 2%, that doesn't have to be the case, okay? If you look at the Fed on a macro perspective right now, we are actually incredibly low. And economist Peter Schiff doesn't think we will see interest rates in the 4% for a while.
We're not going to see 2%. We're probably not even going to see 4%.
Like I said, this isn't to scare anyone, but no one predicted the 2008 housing crisis. It came and it surprised everyone. For example, the 2008 housing crisis just didn't happen in one day like the stock market did on Black Monday. According to the Schiller index, home prices peaked in June 2006, and it didn't hit the very bottom all the way until January of 2012. In a way, this is a slight exaggeration because I don't think this is what is going to happen to us, but also no one was saying the same thing in 2008. So just pay attention and subscribe to get my take and unbiased information as things develop. I think the best thing we can do right now is be patient and just see how things play out. I want to see what happens with inflation and how the Federal Reserve responds to the upcoming data that's going to come up. As of now, I'm changing my prediction of the best time to buy a house from 2023 to early 2024 might be the best time, but this is super tentative as I don't know what's going to happen. Like I said, I want to see what's going to happen with the Fed. Now, I don't get paid for this, so if you want a free stock and help me, please use my Webull link below. You can get up to $9,000 worth of Apple stock. And if you found this video helpful, please give it a like. It's going to help more people and help more people understand the current situation we're in. And I just want to say, I'll see you guys in the next update. I hope you're around.